Hello investors, welcome to Simpli Stocks. Aeroflex Industries has delivered very strong results. This is a data center proxy business that we closely track in our Simpli Stocks community. I had covered this on our channel as well around 2.5 months ago. Since then, it has performed well, and now their results and management commentary were also positive recently. So I thought perhaps I should cover it separately once again for all of you. So in this video, I'll discuss Aeroflex business model, Q4 results, the management's outlook for the future, current valuation levels, and also what you can expect from this business going forward. So without any delay, let's get started. Aeroflex Industries is a small cap data center proxy business, or you can think of it as a data center ancillary business, like there are auto ancillary stocks, right? So the company has entered into an exclusive partnership with a very famous US-based data center technology company called Vertiv. Under this partnership, Aeroflex is manufacturing and supplying critical components used in data centers for Vertiv. These products are being manufactured in India for the first time, and the company has developed them by doing R&D in collaboration with Vertiv. This is their emerging business. Now, talking about their legacy business, this company manufactures flexible flow control systems for sectors like steel, oil and gas, chemicals, ports, and others. If I try to explain in very simple language, let us say if you needed to transfer chemicals, liquids, or gases from one place or unit to another in any plant, machinery, or industry, such special hoses, bellows, and assemblies are required to provide a channel so that liquid or gas can pass, and they also help to control its flow. Now, Aeroflex has deep expertise in this business. They are the largest exporter of flow control systems from India. Additionally, they are also the top suppliers domestically. And because of this expertise in flow control systems, Aeroflex had an edge in the data center business. They are supplying parts to Vertiv for liquid cooling technology. Now, before understanding how big the opportunity for liquid cooling technology is and its scope, let us take 2 minutes here to understand what actually liquid cooling technology is and why is it needed or required. So, data centers contain many servers that do high-speed computing and processing. This heavy processing generates a lot of heat. Previously, HVAC or ventilation and air cooling systems were used to control this heat and also to cool the data centers. However, due to AI applications and hypercomputing, the computing intensity is getting extremely high. Also, the GPU density per rack that has also gone up, for which air cooling is no longer viable. Running air cooling systems for 24/7 is not economically viable because of massive power costs. Therefore, liquid cooling systems are now being installed in data centers. In these systems, coolant is delivered to the racks through hoses or pipes to keep them cool. And you will be surprised to know that 99% data centers which are being set up nowadays have this liquid cooling systems. Consequently, tracking the data center sector, the market for liquid cooling technology or solutions is also growing fast. The total addressable market or TAM or market size for liquid cooling is currently around $3 billion globally, and it is growing at a 33% CAGR. And at this fast pace, you see the TAM itself will grow 6x to $21 billion in the next 6 to 7 years. And mind you, if we calculate the growth rate for this segment in India, it will be even higher because India's data center market is still in its early stages. And globally, Vertiv has at least 25 to 30% market share in liquid cooling segments in the segment. And the data centers that are coming up in India now Aeroflex will be a component supplier for them with Vertiv's help. Now, a humble request just before moving forward, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simply Stocks, where we bring multiple such videos every week, because honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video, and yes, please subscribe to our channel. Now, let us get back to our discussion, and now let us look at their Q4 results. So in Q4, that is in the months of January to March, you will see their sales increased by 38% compared to the last year. The company also saw healthy margin expansion. The EBITDA margin increased from 20.6 to 23.9%. Since they are moving towards high margin products like skid assemblies, so we are also seeing the benefit of margin expansion along with the sales growth. That is why you will see net profit grew at even at a higher rate, 57% year on year. The full year results might look dull to you with only 17% top line growth, but you might remember that US had imposed tariffs. So that was the reason. Now over there everything has normalized. So the business will be doing well going forward overall. So we have to look the direction in which business is going. And anyways, Q4 results were good, right? Now in Q4, 19 crore sales came from skid assemblies, or basically the data center products, which accounts for 16% contribution in Q4 sales. It has only been a few months since they started supplying these products. So from here, on the consolidated basis, the management's target is to achieve 30 to 35% sales growth with a minimum EBITDA margin of 23% overall, and that is the guidance. Plus, as I mentioned, the contribution of value added products is going up. So you can see here that last year data center products accounted for 5% of sales, 2% came from metal bellows, and 8% from their subsidiary Hide Air. These numbers will go up now. For example, Aeroflex is targeting 20 to 22% capacity utilization for its data center division for this entire year. So the contribution of value added products that will go up, which will lead to top line growth as well as margin expansion. So by the end of current financial year, their target is to reach 60 to 70% capacity utilization. They currently have a capacity to manufacture 6,000 skids or units of liquid cooling systems, which they are expanding or increasing to 15,000 units by the end of September this year. And at peak utilization, this can generate 350 plus crore in sales. And I think at 60 to 70% utilization, it can do around 325 to 330 crore rupees in sales. On this, if we take a rough estimate now, that sales in FY26 were 442 crore rupees, or let us say 440 crore for the sake of simplicity. Now, if we add 18 to 20% growth for their base business, and then approximately 330 crore in sales from skid assemblies or the data center division, then they can easily do at least 950 crore in sales by FY28, which roughly translates to a sales growth of 45 to 46% CAGR. In my previous valuation exercise, I had estimated 1,000 crore in sales by FY29, but I think they will achieve it even before than that. Now, as for margins, although management is talking about 25% EBITDA margin, I personally feel that they can achieve 26% plus, because Aeroflex, you will see, has already reached 24% EBITDA in Q4, even when the contribution from value added products is so small right now. So that is there. So we can say that this business has potential to grow its sales at 45 to 50% and net profit at 65 to 70% CAGR in the near future. Now, regarding the recent rally which the script has seen, so yes, some value has been captured. We can agree on that. However, in my understanding, data center stocks will remain in momentum for the next few years, and they will continue to command premium valuations. Like just as we saw how businesses from defense and aerospace got premium valuations, so the data center theme will also emerge as a very significant theme in India over the next 1 to 2 years, especially in segments where there is less competition. There, the scarcity premium can be even more. So, from a fresh position point of view, I think you can still consider Aeroflex with a small allocation, especially after today's fall. And if you already have a holding, you can continue with a sufficiently medium allocation, I think. Now, the valuation trigger that is here, even for the future or going forward, is that the agreement with Vertiv is exclusive for the domestic market, but they have the technology and R&D, right? So therefore, they can supply their liquid cooling solutions to other players in the international market, and that is a big trigger. So as recently in this April, they also participated in an exhibition in the US where they received some leads and now they have started discussions with the prospective international clients. Plus, they have more products planned in their pipeline that is also there. And another key thing to note is that 2 to 3 years from now, when their data center business matures and grows bigger in size, the growth will accelerate further. Or you can think of it this way. Currently, skid assemblies is a high growth segment for them, but because it is a new product, its contribution to their business is very small or almost negligible right now. Like in FY26, it was barely 5%. Therefore, its growth does not make a significant dent on company's overall consolidated growth. But as the share of this high growth segment increases in the total business, the company's consolidated growth rate that will also automatically improve. And I will say the liquid cooling systems is a technology with many possible applications. So this technology itself, it has emerged in the last 4 or 5 years only. Before that, most of the data centers were air cooled. Now, in the future, its applications can expand to cooling EV batteries and semiconductor chips, which is another trigger that can unlock many more sectors for Aeroflex, or basically its TAM will increase. So Aeroflex is still an attractive business. You can study it independently once, and it is not a very high-tech business. So even though it is a data center stock, I hope you would have understood the model by now. I have explained everything to you in a very simple language, what the business actually does and what its products are. So if you like this video, please make sure to give me a thumbs up, and also, yes, please subscribe to our channel, because our purpose through Simpli Stocks is to simplify various business models for retail investors so that the research which is available to mutual funds and ACE investors can reach to you as well. Now, if you support us by liking our videos and also subscribing to our channel, we will be able to bring more such videos for you. So now I'll see you in the next video. Don't forget to like and subscribe. Happy investing.